Hello and welcome to this Friday's morning market briefing. We've got lots to talk about, but firstly, EU leaders agree to start accession talks with Ukraine. As well as that, Andrew Bailey warns still some way to go as Bank of England does hold rates at 5.25%. We've got lots to talk about on the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around till you see that. But before we get straight into it, make sure you subscribe. But the first article to talk about, of course, is the EU. Now, EU leaders have now agreed to begin accession talks with Ukraine following, of course, a summit. Now, this comes following relentless opposition by Hungary's prime minister. Now, the EU, as well as the US, as well as Great Britain, has been supplying, Ukraine with a great deal of not only military support but also humanitarian assistance, as well as financial support as well. And this has largely enabled Ukraine to stay in a good position throughout the war since February of 2022. Now, large issues have started to grow, I guess, within the West in relation to support for Ukraine. We know that there is great issue with passing through any sort of funding bill for Ukraine within Congress at the moment, as Republicans increasingly begin to fade away from the support that they once had for Ukraine in terms of supplying it militarily. I mean, we know we have certain figures within Congress on the Republican side which are more open in their kind of skepticism of support for Ukraine just morally, and therefore we are now seeing this change as well in polling data with individuals within the US just outright not caring as much about the war going on. Now, we've also seen this within the EU, as the article does highlight, with Hungary's Prime Minister Viktor Orban, obviously having this more anti-Ukraine, pro-Putin stance, and this has created quite some issues for Ukraine in relation to both NATO and the EU. We know, Hungary as well as Turkey was able to kind of hold up Sweden and Finland's kind of bid into NATO. I believe Finland was then able to join. Sweden's still in the process of such, but ultimately, there are figures within the West which ultimately are providing more of this skeptical view of Ukraine, and Viktor Orban has been one of those, and therefore has prevented so far Ukraine, from joining the EU, which is far more of an economic and kind of political union rather than one of military union like NATO, let's say. With the talks yesterday representing an endorsement now of the nation's Western trajectory. So that meaning, now it's clear that the EU is, supporting Ukraine in its move to become more of a Western aligned nation. Now, it is also a part of the EU's proposed support package for Ukraine and 50 billion fund. Now, that 50 billion fund would also go towards supporting Ukraine financially as well as militarily. However, of course, issues are arising in getting that 50 billion fund in place for Ukraine, as we do have figures such as Viktor Orban which are willing to always kind of veto these sorts of funds. Now, this support now is being has become ever more critical, following no more aid from the USA. And we know this, as I just mentioned, with the POTUS's calls, so Biden's calls so far for increased military support for Ukraine kind of just being ignored by Congress. We know we now have a more I guess not so much anti-Ukraine, but more of a neutral individual that leads Congress at the moment as House Speaker, and that Republican speaker is obviously a bit more kind of apprehensive about Ukraine's kind of drive to win against Russia and the US's support for Ukraine, as we are now seeing no deal pass through which would support Ukraine anymore militarily pass through, and so that's definitely something to note. Now, the agreement on accession only followed Hungarian Prime Minister Viktor Orban leaving the room to allow the debate to come to an agreement, with Hungary deciding it does not want to share this apparent bad decision. So it's clear here that Viktor Orban, despite EU leaders now agreeing to start accession talks, it's clear that Viktor Orban hasn't actually changed his point of view. He's just no longer willing to argue on the point of it. Orban has continually opposed support for Ukraine or membership for Ukraine within the EU, and that's obviously following Russia's invasion into Ukraine. In addition to Ukraine, EU leaders agreed for talks with Moldova and Bosnia as well. So, that's a clear gain for those nations as well. And I believe there's talks around Georgia being granted now its candidate status to be considered as someone, as a nation which could then be kind of spoken with around accession into the EU. Richer nations, however, want the EU budget only to increase in order to help Ukraine, whilst others, like Italy and Greece, want more cash to spend on migration issues, as we do know that especially Italy has had recent issues in relation to their kind of political, policy interests, with Giorgia Meloni obviously being elected, representing more right-wing views around the issues of migration within the nation, with the EU officials already starting discussion on new solutions to raise money for Ukraine outside the common budget, but stressing their sole objective is to get Orban to U-turn on his veto over financial aid. So that's obviously important to note. Most definitely, we need to keep our eyes on any of these kind of comments which might involve, escalating world tensions, as this will drive gold and other safe haven assets in a bullish manner. So keep your eyes on this. Next article to talk about, though, is Andrew Bailey. So now onto the topic of interest rates and inflation. The Bank of England held rates at 5.25% in yesterday's meeting. This came as Andrew Bailey warned there was still some way to go before inflation would hit its target, with the Bank of England also leaving open the option of further rate rises if necessary, and warning that rates would be kept high for an extended period of time. Now, this is a really interesting article and kind of topic of discussion in relation to news within the financial world at the moment, largely as a result of the fact that we have also had the Fed's interest rate decision this week. And in yesterday's kind of discussion, market briefing, we did discuss how the Fed did hold interest rates at their highest level, where they'd help, which they'd obviously got to following consecutive rate rises. But ultimately, what we spoke about yesterday was the changing Fed rhetoric, which was more dovish in the way that Jerome Powell explained the future policy decisions of the Fed, where, he did leave open the chances of rate cuts going into early 2024. And obviously, this did have a great market impact, with a very bullish reaction on the US indices market, as well as seeing, a drop in the dollar's value as people began to move their money out of the dollar and into maybe the pound, let's say, or other kind of currencies which they expected to have higher interest rates for longer. As this kind of more dovish rhetoric obviously provides less of that kind of security around earning interest on your money in deposit accounts. But ultimately, this is interesting to note, because what we have now seen from Andrew Bailey contradicts the messages that we did hear from Jerome Powell with the Fed, and creates a very interesting situation for some pair like pound sterling, where we are now seeing an increasingly more hawkish picture for the pound, whilst we're seeing a more dovish picture for the dollar. And this has kind of been in inverse actually recently. However, now it does seem to be reversing on itself. Andrew Bailey did warn also that the data will be watched closely, with there being some way to go with inflation progress. Now, the Monetary Policy Committee voted 6-3 to keep the interest rate at the current level, with 3 voting for an interest rate hike. Now, that's very interesting to note, as I think many people within the markets at the moment still perceiving there to be no potential for a rate hike, and therefore we're kind of only really talking about when could there be a rate cut, when's the first rate cut, is the Bank of England going to cut rates last? We're expecting the ECB to cut rates first. Fed second, then Bank of England. But ultimately, there still is the chances of a rate rise on the table. Obviously, yes, nominal inflation is coming down, or headline inflation is coming down, but ultimately core inflation within all these nations has remained quite, resistant and quite strong, and therefore that's the key thing that all these central banks are focused on and trying to get down to that 2% level. So that means, there is always that potential for rate rises. And this is what we're seeing with the Bank of England's rhetoric, which likely did surprise markets yesterday, which is why we've seen such a market reaction. To see this market reaction covered, wait till the end when we cover it on the charts. So make sure you wait around till you see that. Now, hawkish members did note signs of financial conditions having eased recently, therefore justifying their vote for an interest rate hike. And that's interesting to note as well, as those easing financial conditions can force the Bank of England, let's say, to raise interest rates further to make up for those looser financial conditions. With this rhetoric seeing markets react in an opposite function to what we saw with the Fed's interest rate decision, with sterling rising 1.1% against the dollar, reaching levels not seen since August. And this is what we'll come to after this article. UK bond yields made gains over 2-year yields, remaining down 0.06 on the day. So that was actually contrary to what was previously expected. So overall, we did see bond yields make gains. However, the 2-year yield did drop slightly on the day. Bank of England projections also expect GDP to be flat in Q4, which is lower than previously expected, as what it was previously expected was 0.1% on the quarter. But as we know, yesterday we covered this, the UK GDP did contract during October as a result of wet weather, and so it does seem now that the Bank of England's factoring that into their kind of predictions. Now, the Bank of England also did warn that core inflation was stubborn and still above the US and the EU, and this is how we're kind of always structuring our views on inflation and interest rates and the future of markets, is looking between these key nations within the West, which make up a large percentage of financial markets, and looking at how central banks in these nations are differing to one another in their monetary policy. Services inflation, however, has shown signs of easing, with services inflation being used as an indicator by the Bank of England to look for underlying price pressure. This easing of inflation has typically been driven by components such as non-private rents and airfares. However, they aren't typically reliable indicators of trends in inflationary pressures. Now, the Monetary Policy Committee meeting did come after Chancellor Jeremy Hunt cut personal and business taxes in his autumn statement last month, which of course we did cover. So it's an interesting time for Britain, and especially Britain's financial markets. Keep your eyes on any monetary policy rhetoric from the Bank of England, but that's all to talk about in this article. Next thing to talk about, of course, is the charts, with the first kind of asset to talk about and cover obviously being US indices. So like we said just in that article, yesterday we covered in the morning market briefing the fact that the Fed had held interest rates at their concurrent levels, and therefore did provide also new rhetoric which was more dovish than previously expected, and so many individuals within the market did start to perceive the Fed as a more dovish did start to perceive the Fed with a more dovish tone. And since then, we did see the US 30 break above, its highest high on the market, its greatest high, and did make, its greatest high actually yesterday on Thursday. And now we're consolidating around those levels. What will be interesting to see now is whether we do retrace, as it does seem that we're kind of consolidating at those highs. The question is, where then will price move down to? Obviously, we do have, the greatest high over here that we've noted. However, obviously, there is a chance that, price breaks down further than that and therefore comes into contact maybe with one of these Fibonacci zones. As for which Fibonacci zones seem most likely, the 50% obviously lines up quite well with this area of accumulation, so quite possibly there are a good amount of buy orders within there. And then next we'd probably note is either 6180 or even more so the 7860. However, it's quite unlikely that we do see the market kind of decline to that sort of level. Therefore, we're more likely just looking at the 3820 maybe, or the 50%. So keep your eyes on the US 30 as we do end this week. Next talk about though is the dollar. Now the dollar, of course, has had a massive sell-off since the Fed's interest rate decision and that more dovish rhetoric. And it does seem that after today's Bank of England decision and that more hawkish rhetoric that we did here, we have seen that continuation of a sell-off on the dollar as more people now are seemingly moving their money from the dollar and into the pound to earn that better interest rate than was previously expected. And we've seen this significant sell-off. And if we were to just look where the dollar might have been last, we would be tracing back all the way to the start of August. So we're reaching very, very significant levels. What will be interesting to see though is because we've taken such a significant move to the downside, whether price will now retrace maybe back up to the the upside just a small bit to find that continued liquidity and continued resistance to continue making those moves to the downside. So we could be looking at a retracement up to this 3820. That said, we do have a great deal of momentum to the downside at the moment, so quite possibly we just see this continuation before we do see a retracement. So make sure you're looking out for any moves on the dollar. Next talk about though is Euro USD. Now Euro USD, since we marked out this area on the 7860 to our pleasure and to pat ourselves on the back here, we have seen a very significant move away from this level, which we did note as a high probability bullish area, as we did note the fact that it was sitting on a 7860 on the Fibonacci retracement tool, as well as a significant area of liquidity as well. And following, of course, the increased hawkish rhetoric for the Bank of England and the more dovish rhetoric for the dollar, that downside pressure on the dollar has driven Euro USD to the upside, as the dollar is just so weak at the moment. And so we have now seen a significant push to the upside. What will be interesting to see though is whether we will be able to reach this minus 27.2 Fibonacci extension level, which of course price could most definitely reach. It does have the bullish momentum, but the question is price now kind of overbought and therefore waiting to retrace, as it is in a quite significant level to the upside. So maybe we do see a retracement before we see a continuation to the upside. That's kind of added to the picture when you do look at the fact we are kind of making a double top. So it could be quite likely that we do now see that sell off. So definitely keep your eyes on this. If we were to draw out the fib, I'll just draw that out quickly. I've kind of drawn that poorly. No, wait, sorry. But yeah, we could be looking at a retracement maybe down to that 3820, which does kind of line up with these previous areas of liquidity. So keep your eyes on this. Next talk about though is pound yen, which of course following the more kind of hawkish rhetoric from the Bank of England, we have seen a bit of buy side momentum for pound yen. However, overall, just because of how much kind of bullish support there is for the yen at the moment, pound yen is really kind of struggling to make any significant moves to the upside. But as a result of the Bank of England's rhetoric yesterday, we did see pound yen make a double bottom. So that's something to note, of course. Maybe this area does act as now a kind of market floor for pound yen. But it'll be definitely interesting to see what happens with pound yen at the moment. It's just so volatile at the moment. It's hard to kind of see where price may go. Next talk about though is Bitcoin, which is in a very interesting position since it has now come into contact with this area of resistance and liquidity we did note in yesterday's morning market briefing. Price does seem to be struggling around that area despite having come in contact with the 50% Fibonacci area and then having that bullish momentum to the upside from there. Price is struggling in contact with that level. So it's hard to decide where price may go. It is also sitting on that 61.80, so possibly that's also providing it with some sell side momentum and making it kind of struggle with this move to the upside. But definitely keep your eyes on Bitcoin, as these kind of interesting signals from the Fed are actually weighing into the way that Bitcoin is moving at the moment. So keep your eyes on that. Next to talk about actually is just gold. Gold is kind of coming into contact with this area of liquidity and resistance now, after obviously coming into contact with that 78.60, but seemingly following the more kind of hawkish message from the Bank of England. Many people are seeing now that other currencies, of course, are enabling that higher interest rate, so they don't just need to put their money in gold, and all these central banks will start cutting rates immediately next year. There is some currencies at the moment which are providing that more hawkish message, which some investors are looking for. So that's why we're kind of now seeing that stall on gold, but keep your eyes on that. Lastly to talk about though is oil, which has come into a very interesting position, now coming into contact with this market floor that was formed on the 16th of November. It did form that lowest low and, kind of create that significant area of liquidity and resistance as a result since we broke through it. And, price has just been waiting around until it's retested just now. As well as that, with the 38.20 sitting on that area, we do have a kind of high probability area for a downside move. So it'll be interesting to see whether we will now sell off from that area. So keep your eyes on that. That's all to talk about on the chart. So lastly to talk about, of course, is the economic calendar, where we do have quite a bit of data coming out today. We'll get through it quick though. Firstly, we do have British consumer confidence figure being released. As well as that, we will be getting Chinese house price index figure, retail sales data, and their industrial production figure. So lots of data coming out from China. As well as that, we're getting the French and Italian inflation rate. Listen out for that to understand more about the Eurozone inflation issues. As well as that, we're getting French manufacturing and services figure, German manufacturing and services figure, and Eurozone manufacturing and services figure. So lots of manufacturing and services figures for the Eurozone, most definitely. As well as that, we are getting British manufacturing and services figure being released, so listen out for that. As well as that, we will be getting the Eurozone and Italian balance of trade figure being released, so that's important to note, of course. And then finally, we're getting the US industrial production figure being released, as well as their US manufacturing and services figure being released. So lots and lots of data this Friday. That's all from us at Wild Capital though. We've covered lots on the articles, charts, and economic calendar. Hope you have a great trading day and a great rest of your weekend. We'll see you back next week. See you later. Bye.